Hello and welcome to today's Wired Briefing, the cash comeback. I'm Greg Williams, the Deputy Global Editorial Director of Wired. We're delighted you could join us. Before we begin, a couple of important points. You can submit your questions using the Q&A button at the bottom of your screen. And this briefing is being recorded, so we'll gladly send you a copy of the link after the event ends. Now onto the session. In today's briefing, we're going to be exploring the future of cash and the role technology plays in financial inclusion. The tipping point for the domination of digital payments is on the horizon as more and more of us turn to tapping, clicking and swiping for our purchases. However, it's not the end of the road for cash, far from it in fact. Data shows that there's roughly twice as much cash in circulation as a decade ago. Many people are still paid in cash, and for those that struggle to access a bank account or prefer the privacy and security of cash, physical currency is still a lifeline. With that, I'm delighted to be joined today by Robert Albrecht. Robert is Head of Business Development Activities for Paysafe, the online payments company with a transaction volume of more than 4.6 billion US dollars. Robert also oversees e-cash payment method Paysafecash, which offers more than 200,000 cash payments and top-up points for bank accounts, wallets and online purchases in about 30 countries. Robert, welcome.
Hi, Greg. Thanks for having me.
So let's get into it. We saw an enormous rise in people transacting online and using contactless during the pandemic. So I'm curious to know from you, why do people still need to use cash?
Well, I think in general, there are two questions. Either they just want to use cash because of convenience, practice, habits, budget control, maybe another reason to keep an eye on their spendings. Some for security reasons, because cash is still like the safest one without the threat of somebody stealing your data to your online bank account or your credit card details. These are the reasons maybe you and I would say to that question. But there are unfortunately also people who just don't have any other choice, who are still excluded from our digital financial services ecosystem and therefore do depend on cash for their day-to-day purchases and getting their life going. So I think in general, these are the two reasons why we still see a huge need for cash in our today's society.
And what kind of percentage of these transactions are people transacting across borders?
Well, when we talk about cross-border transaction, I think I'm not sure if you refer there to money remittance, where we see a huge ask for cash, but we do see more need for cash for, how do I say that, everyday banking services, need for depositing cash to a bank account, not necessarily transmitting it across borders, but using it for yourself for either savings or for investment decisions, or to just pay a bill or to pay a utility bill, or to pay for a purchase. So this is where we see the most use of our product for digitizing cash.
I see. Okay. And give us a sense of the geography of this. Which countries tend to have a higher proportion of transactions or involving cash? Where's cash most prevalent?
In the markets we serve, which is basically Europe, North America, South America, we see the strongest demand in South America, where cash is still much more popular. The US followed closely, because also in the US you must see over 20% of US households are still cash dependent.
That's so interesting. I had no idea that was 20%. That's a very high number.
It's huge. And when we talk about Europe, the more south and the more east you go, the more cash savvy people are, the more they like to use cash still in their everyday purchases. It's less in the Nordics, less Sweden, Denmark, Finland. I mean, we know that from the news. That cash is not very much distributed there, but in the southern, eastern European countries, cash plays a vital role in people's life.
You mentioned earlier on, clearly the world is digitizing. Are we in danger, do you think, of excluding, large numbers of people from what you're describing? 20% of Americans you mentioned. Are we in danger of excluding large numbers of people from the financial system?
Well, not if we do it right. So yes, when we see the rise of digital financial services and everything going online, typically nobody thinks about how do you use physical money for online transactions. And this is where digital is good to bring services to people who have a mobile phone. But if they neglect the way people like to pay, which is then cash, then we have a problem there. So digitization in general is good. And in fact, when we say we digitize cash, we help that trend. But I think it's important that we do it in a correct way and that we build the bridge between digitizing services so everyone can use that in line with expanding the infrastructure access for everyone equally, but still help them to make the transition into a digital only life. And this is where we see also the role when we say we make physical cash usable in a digital world. That's exactly what we would try to bridge both worlds together, supporting the digitization, but in a way that everybody feels he's considered and not left behind.
So you mentioned digitization. Clearly, you know, most people would see this as a positive, but again, there's going to be people who are maybe you know, not as comfortable with it. So is some of this down to the, you know, people's attitudes, right? Inherently, it's kind of cultural. Some people maybe feel worried about, I don't know, online crime, and they see cash as inherently just more dependable.
So, I mean, cash, when you talk about online crime and when you go online, you inevitably expose information. And when we talk about financial services online, it's even more sensible data because you expose potentially financial information to someone who do you not want to get this information.
Yeah.
And when we look at cash is usually known from a person-to-person transfer. There's no credit card data, no bank account details attached to that, so it's considered safe. And yes, cash is the safest way to pay still in our everyday lives. And this is also the reason when we come back to your first question, why people use cash. Yes, it's because of its security features and to prevent themselves from online crimes, which is stealing credit card data, because mine has been stolen twice already online. So really? I know what I'm talking about. Yeah.
Right. Okay. So I mentioned in the intro that there's more cash in circulation than ever before. Why is that? Why is there so much cash around?
I think it's also important to understand that cash is growing over time for the last 10, 12 years with 5 to 8% every year compound average growth rate. And we see a interestingly steep incline last year during the pandemic when everybody was talking, hey, the world is going cashless and we all gonna go pay digital. We saw a rise of 11% of cash in circulation. And the reason is safe haven. It's trust. People see cash as the only form of legally backed worth or value or wealth, and do not trust bits and bytes so much as what they can touch, feel, put under the mattress. So cash is considered a safe deposit of your value, of your wealth, more than maybe your bank account or your credit card, because that's just a piece of plastic.
Yet one of the challenges is that clearly there's just the infrastructure, right, for the acceptance of cash, it's diminishing. How do we balance those two things out? You know, what are the challenges here?
That's interesting that you say that, because what we observe is that, and this goes back to information from the European Central Bank last year, the actual infrastructure of accepting cash, like point of sale terminals, increased by roughly 4.3%.
Interesting.
Getting cash, accepting cash is growing in network size. But you are right, the network for disbursement of cash, like ATMs, is decreasing for cost reasons, because banks are having a lot of cost to maintain that infrastructure.
Yeah.
So while the acceptance network is growing, the disbursement network is reducing. And this is also where we say, hey, why don't we just use the supermarket POSs, the gas stations, whoever accepts cash in our surroundings, for use cases you don't think about, like online bank deposits or online transactions, because the infrastructure is there. We just need to use it to make it also accessible and usable for people want to use digital services but pay cash and have this huge network out there where we just say, hey, we built this bridge, use the network for your online transactions.
So clearly the last few years has been marked by the rise of challenger banks, and N26 out of Austria, I guess, well, out of Berlin, huge presence now throughout Europe and the United States, Monzo as well. Do you think they see the opportunity in cash? And if not, why?
They do. So N26 Berlin, former startup, now a major player in financial services. Monzo in the UK, they do see the opportunity and they already use it and grasp it because they have services in place to serve the cash needs of their customers already. So Monzo, for example, online only bank said, similarly to N26, if we want to be the primary location for our consumers' financial services or banking services, if we want to gain relevance to our consumers, we also need to address their cash needs. And N26, for example, works with a solution which now belongs to us, to Paysafe. They call it Cash 26, where they create a barcode in their application, which you can use for deposit and withdrawal of money from your N26 account at such POS as I was mentioning earlier, gas stations, supermarkets. So they already use our network where we bring to the cash needs of their consumers. So these challenger banks now start to realize online is great, online is cost efficient, online is convenient for my consumers because it's all on here. But if I want to be the primary service provider for my customers, I need to also address their physical offline cash needs.
Just a reminder to everyone watching, please do send in your questions for Robert. We're interested to get your thoughts on this and maybe some of your experiences as well. So Robert, just to drill down on that a little bit, you see a real opportunity for these digital first banks to really embrace customers who still want to use cash.
Yeah, I mean, Greg, do you have an online only bank account?
I do, yes.
So how do you deposit cash to it?
I have to go to a branch of another bank that has a relationship with the online only bank.
Right. So usually that's the answer which I get a lot. That if you have an online only bank, which is not number 26, or one of the other already cash accepting online banks, you need to go to a legacy bank who has a branch network, deposit cash there, and transfer it to an online bank.
Yeah.
This is inconvenient, and this is also dangerous for challenger banks because you're literally forcing your customers to visit a competitor's bank branch. And I think in order to, as I said earlier, in order to stay relevant for your consumer base and to grow in consumer base, you need to address these extra services and make yourself as necessary, as indispensable as possible for your consumers without the need to use any other service going forward. And cash belongs to it because we all have access to cash. We can be as cashless as we want in our everyday lives. We all at some point in time have cash at hand. If I have then an online only bank account, how do I deposit it there? I need a convenient way to do it. And this is where I see a chance for challenger banks to still be relevant for their consumers, but also a threat if they don't, because legacy banks also don't sleep. They offer online portals, apps, and convenient ways to interact with their services, while still having the branch network, while still having the ability to serve the physical needs of their customers. So it may be a competitive edge now to address that, but it will become a necessity for online banks in the future.
So let's dig in a little bit to the products. I mean, finance is obviously highly regulated. How do you work to ensure compliance?
Me talking up a bit on the word on compliance that's not related to the question. We have our own license, so we work under an e-money license from the CBI and FCA. So we take over the entire compliance, anti-money laundering, terror financing risk, which you have to deal with when accepting cash, particularly for online services on our own. So we offer a carefree package for our customers, particularly in the financial services sector. And this provides basically a lot of, well, confidence and also a lot of advantages for our merchants in the financial services sector who do then not have to take over this risk on their own. But we also say, when dealing with banks who have a bank license, we say, if you want to use your own regulatory framework, your own systems to observe the money flow, you can do this, and we only act as a technical service provider. So we adapt to what our customers wants to have, always making sure we comply with local laws and regulations. And I can tell you, I think our fraud compliance department here at Paysafe is one of the fastest growing and most professional teams I've seen, in order to make sure that we keep up with the ever-changing regulatory framework, particularly on the matter of cash and cash online. Because from a regulator's point of view, this is highly or this is to be monitored very intensively. And we say this is good that they do this, and we will ensure that we comply with whatever they ask us to do.
We've got a question coming in from Robin, who's watching the session, and he's interested to know which industry sectors offer the most opportunities for an accelerated shift in payments and the merging of cash and digital payments, do you think?
I think the industry we were talking about the most in this session is financial services, for a very easy reason, because financial service providers, their core business is money. They think about money in how to invest, how to transfer, save, provide as a credit. And cash is just another form of wealth, and is a form of wealth, particularly if they are in an online business, they currently have no access to from their consumers. So we open up an entry portal for another source of their core product into their ecosystem in order to be used there for investment purposes. So financial services who think in money every day also recognize that cash is still relevant and cannot be forgotten entirely, as we have seen with your Challenger Bank example earlier, how to deposit it. But also there are industries who go online recently, unlike industries, for example, your utility service provider, your telecommunications cable provider, your water and gas provider, who go more and more digital recently with apps to monitor your usage, to monitor your account, but who have a legal obligation for anti-discrimination rules not to leave out cash on their to be accepted for payments. So we see in our business these two industries as the main drivers of growth, also in the future. More focus on financial services though, because they are on the rise, particularly more on the online side, and we try to help them to bridge the gap to physical cash.
We're knocking up against time now, Robert, but I'd love one kind of final question from me. We keep hearing predictions about a cashless society. Do you think it's inevitable? Is it just a question of time before cash just disappears?
My personal opinion is I hope that we will come to a situation in our society where cash is not there anymore. Because when we look back, I mean, people started with exchanging shells for payment, and they went to gold, and they went to paper money. Now we have online transactions. So if to assume that we have now reached the end of this innovative journey in how people pay each other would be very sad. So I hope that there is a huge evolution coming, and we see that with crypto on the rise. So I hope that. I don't know if that will still happen in my lifetime, but this is the question. It's the timing question. I don't see that in the next 5, 10, 20 years, to be honest, because it's the only legal ledger, cash still. We see that there is a trend towards also governments now thinking about e-currencies, but if we, or when we will reach the time when cash is completely gone, I think this is still very far away, and I wouldn't bet on it today.
Okay, well, it'll be interesting. Let's get together in a few years' time and see where we are with that. So thank you, Robert, so much for your time today, for sharing your insight. And if you'd like to find out more about the future of cash, please do read Wired's new ebook, Online Today, created in partnership with Paysafecash. It can be found at wired.co.uk. And we'll also share an email with the link after this event if you've been watching. And if you've enjoyed the session today, please do check out other episodes of Wired Briefings at wired.co.uk. A final thank you to Robert. Thank you so much for joining us, and to everyone watching the sessions. Thank you, stay well, and we will see you soon.